Okay, here we are. So, good morning or good evening, everybody. Most people are good morning, as I think you are the only one, Alex, in the US time zone. But that's
Probably.
the purpose, right? Is to make our partnership and yourself and your company known as well on this side of the world. So, so today we've decided today to do a fireside chat with Alex Mashinsky from Celsius Network and myself from Onchain Custodian because we have some news. So we are partnering, and we will talk a little bit about this partnering. And this session is also part of a 5 weeks virtual exhibition booth that we have on our social media, as we cannot meet you at conferences. So it's the opportunity to meet you online. So this is a fireside chat. It's not very formal. We have basically half a script that we'll go through. But before we start, maybe we can start by thanking you, Alex, for accepting to join me on this fireside chat, and start maybe with introductions. Do you want to start, or I do?
You can go first.
So on my side, I'm Alex Kesh. I used to work for the banking industry, not really the banking, well, although at the beginning of my career, I worked 4 years for the Bank of New York, which is a major global custodian on this planet. And then I moved quickly to SWIFT, which is, you probably know, the interbanking financial network that banks are and other financial institutions are using for transmitting instructions, so transaction instructions. Please transfer this from this amount from this bank to this bank. Also, settlement of securities transactions. So little known fact, but SWIFT actually 50% of the volumes on SWIFT are securities, so capital market transaction settlement. Clearing and settlement activities, FX and securities. So in 2018, I joined a group of people, Da Hong Fei from NEO, Richard, Raymond Cheong, and El Lee, to create Onchain Custodian. We are a digital asset custody service in Singapore, and our role is to offer secure insured custody to institutional players as well as accredited investors, as we call them, but also projects who need wallet management systems. I'll talk a bit more about the company as we go through this fireside chat and what we offer as services. But beyond custody, we also offer to our customers the ability to, for example, lend their crypto. And that's in this context that we've made a partnership with Celsius Network to enable our customers to lend to trusted partners who we know will not lose those coins and will manage them properly. And I think it's the right time for you to introduce yourself, Alex.
Sure. So Alex Mashinsky, I'm the founder and CEO of Celsius Network. We're based in New York and have offices in Europe as well, and about 65 people. And we're focused on two services. One is interest income. So we basically pay interest on about 26 different coins and tokens. And the second part is we issue loans. So we issue either coin loans or dollar loans, depending on what people are looking to borrow. And we have customers, about 85,000 customers from about 170 countries. And before Celsius, I did 7 other startups, mostly here in New York, all in the tech and internet-related industries. So I had 2 unicorns, raised a lot of money, had 3 exits, and really moved to the fintech world to try to build a new financial institution that always acts in the best interest of the customer.
Yeah, we met, I remember, the first time at Token 2049 about a year ago in Hong Kong. And I must confess, I was fascinated by your speech around the banking industry and how it's going to collapse, and how we should be careful about protecting, as retail investors or as retail owners of value, our assets through platforms like yours. So how did you come up with this idea of interest or paying interest on crypto and building your business?
Well, if you watch the progression of banking around the world, you'll see that basically starting with Japan and then Europe and now the United States, progressively banks do less and less for their depositors, and they do more and more for their shareholders and their executives, right? And basically because banks are centralizing, there's less and less banks, and the remaining banks are bigger and bigger, too big to fail. The banks that are dominating our industry are really have to deliver higher dividends, higher stock buybacks to their shareholders, and the only place to take that from is from their customers. So we believe that simple things like interest income that existed for the last 700 years of banking have basically disappeared from the face of the earth. It's impossible to earn any interest in Japan. It's impossible to earn interest in Europe, anywhere. And even in the United States now, interest income is something that almost dwindled down to zero. So we think that financial institutions obviously make a lot of money from these assets. And the decision they have to make is all that value that they create with the money that the depositor give them, should it go back to the depositor or should it go back to the shareholders? So while we give 80% of what we make to the depositors, most banks and financial institutions give 80 or 90% to their shareholders. It's that simple. I mean, it's not complicated business.
Understood. Yeah, on our side, we also believe in that. So we offer open finance service, as we call it. So beyond custody, lending is one of them, and we will be talking in other sessions next week and the week after about other open finance services that we believe make sense to our customers. The lending world is not only Celsius Network, where there are other lending platforms. So what makes you different from other, and what makes us actually haven't taken the right decision actually to partner with you and not with other lending partners?
Sure. So a few things, and I also want to talk about the custody because I think up until like 2016 or 17, running an exchange and providing custody was considered the same business, and I think it's an important evolution of the industry that those two are being separated. So definitely would love to get your opinion on that as well. But Celsius really created this whole idea that you can earn interest on your coins, right? Before Celsius, there was nowhere you could go and just say, oh, here, I have some BTC, can I earn some interest, right? So if you were a sophisticated trader and you knew exactly what you were doing and you could lend stuff directly to counterparties, yes, maybe you can extract some value, but there was no simple service like Celsius provides where you could just deposit stuff in an account, earn yield, get paid every week, and so on. So we created this category. In the beginning, everybody thought we were crazy and it's not going to scale, and who's going to trust you with their coins, right? And obviously we've proven everybody wrong. And I think now we have probably half a dozen competitors, but none of them are really focused on creating a community for the users, right? So I think if you're looking at Nexo or some of the other providers, I mean, Nexo is paying 30% of their income to their depositors, right? Where Celsius pays 80%. So it's very easy to see the difference both in income and in yield and everything else, because if you're paying 30%, how can you compete with somebody who's paying 80%? So we set the bar very high, and anyone who wants to compete with us has to pay more, or they have to earn more. So you either subsidize the service, meaning you will never be profitable, or you're doing a phenomenal job for the community, better than Celsius, and then we've done something good because we got somebody to pay to do even more for the community than Celsius does. So I think our choice of setting the bar high, keeping the quality, only working with very high quality borrowers, and being fully transparent. We publish our numbers every week basically, and it's all on the blockchain, so anyone can audit us at all times. So all these things together have created a new business model that really did not exist before, right? Because most of the services that existed before Celsius were people who lent you dollars against your coins, right? That were margin lending, and they charged you 18 to 24% for an asset-backed loan, right? If you go to a bank and you take an asset-backed loan, you'll pay 4 or 5%. So they were basically overcharging the community because there was no easy way to get a loan against your Bitcoin, for example. So we lowered that to 5%, right? You can borrow from Celsius at 5% if you want dollars against your Bitcoin. So we kind of ruined their business, and at the same time also created this new business called interest income. And that was just because we wanted to give more to the community. We wanted to give more to the users who effectively were being taken advantage of by some of these other providers.
Understood. Well, to your question on my view on exchanges versus custody, yeah, definitely. That's the reason why you've been experiencing I would say, a creation of multiple custody providers, and I think they won't. You had the traditional ones like BitGo have been around for quite a few years, and others as well. But in Asia Pacific, there was quite a gap in terms of service offering, and exchanges in Asia Pacific as well, in particular, were being hacked on a regular basis as well. So I think the combination of lack of focus of the exchanges on custody, meaning they're good at intermediating buyers and sellers, but they're really bad at taking care of the assets of their customers. And the lack of custodians in Asia Pacific led to the creation of Onchain Custodian and other custodians in the region. I think it's good to have regional players that can really look after the assets of the Asia Pacific customers themselves. We've been hearing people in Asia Pacific worried about the fact that their assets were historically with BitGo or Coinbase custody because of the fact that there was no other alternatives. And the reason why they were worried is because these competitors are based in the US. So you never know what the Securities Commission can do. You never know what lawsuits can lead to. And I'll ask you a question about the recent lawsuits that we've all heard about in New York against about, I think it's 13 companies, if I remember properly. That's a worry as well that created, I think, a wish for independent custodians in Asia Pacific. That's good. That's all good to secure assets, but I think people are looking for more than just securing assets. So that's why we're trying to build proper partnership to offer more to our customers than just custody. And again, that's why we've been working with you guys, and we also work with wealth management platform that can offer investment products, for example, actively managed, and some are capital guaranteed. So I think it's the very beginning, right? And I think you would agree on that, very beginning of our industry. And I think we have an opportunity to become creative on how we can help the end user, the customer, because at the end of the day, it's their money, to make it efficient and make it better than the banking system, actually.
Yeah, look, I think I agree with you. I think especially like only companies like BitGo and others just also charge too much, and so there was an opportunity for newcomers, especially if they were offshore or at least not based in the United States, but still based in a very, at least kind of clear regulatory regime, like Singapore, for example, right, or Hong Kong, where family offices or institutions can feel very comfortable that they know what the rules are, they know they're not going to change, and they can get into this asset class knowing that that they're working with someone who will basically fulfill all their needs. And I think, like for example, what happened to us, where we worked with BitGo from the beginning, we were probably their largest customer, and then they decided to get into our business, right? They saw that we were so successful, and they decided that, why don't we become just like Celsius? And these are the kind of examples of partnerships that where your provider becomes your competitor, which are obviously not a very good partnership. So and we work with multiple custodians, and for each customer we try to fit the best need that they have, right? So some customers, for example, want their keys to be offshore or not in the United States for a variety of reasons, but also for tax reasons, for security reasons, for regulatory reasons. And I think the best-in-class providers are going to basically accumulate a lot of assets, and the people who are basically compete with their best customers are not going to survive. So that's kind of my analysis of what's happening now. We work with Prime Trust, we work with Kingdom Trust, we work with several other custodians, also work with Fireblocks, which is not really a custodian. It's more of like a security layer. But I think the opportunity for a lot of both crypto players as well as more sophisticated institutional family offices participants is really to identify the custody that they need, and then decide, for example, to take advantage of the partnership that we have, where they can have yield on the asset as well. And I think the opportunity long term is that at least I think we both believe that many asset classes are going to become digitized. Mm-hmm. And when they become digitized, they're going to be handled by a custodian, like you were talking about Bank of New York before and others. I think all the business that those guys have with securities or with bonds or everything else is going to migrate to digital custodians like you. And again, with services like Celsius, you can basically create yield, which today, even on Wall Street, does not go to the asset owners. For example, for most people who don't know, that business called SEC lending on Wall Street, and if you can own even $1 billion worth of Apple stock, but when you give it to State Street or when you give it to Bank of New York or any of the other custodians, you don't get to earn the money that they make from rehypothecating the asset. So the innovation, the opportunity that Celsius and Onchain is presenting is really to say to you, hey, this is your asset. The asset is earning that money. It's not that we are so smart. The asset is earning that money. You should be getting most of that value back, and it really enhancing your yield, right? If instead of cost you have income, that changes the math very quickly over 10 or 15 or 20-year period where you're holding that asset.
Makes a lot of sense. And so what's your, talking of Asia, so most of the participants and most of the people who will watch the video afterwards are from Asia Pacific. So what's your ambition in Asia Pacific? Are you looking at also offering your services to retail customers like you do mostly today in Europe and US, or maybe I'm wrong actually on the type of customers you have? Can you clarify that a little bit?
So we have a lot of Asian customers. Obviously, Australia is a big market for us, Korea, and okay. We are blocking our services in countries that require licenses. So for example, in Japan, we're not offering the Celsius service right now. We are launching with a partner over there, and we partnered with high quality customers like Corbett in Korea, for example, and other people. So, but we have tens of thousands of customers in Asia. So okay. It's a obviously very important market for us. I think the Asian community is looking at crypto assets, both as from a speculator standpoint as well as a long-term investment standpoint. So I think you have two groups of participants. Like when you're seeing the Bitcoin moving up and down in direct correlation to the world stock market, a lot of that is Asian speculators betting up or down on BitMEX or on Binance or some other exchange, and really driving the prices. Again, with no fundamentals in mind. This is everything to do with just speculative selection. So I think the Celsius community is a hodler community. It's not a speculator community. Most of our customers are just adding assets when the markets are volatile, especially if they're crashing, and they want to accumulate and create a lower average cost base for their Bitcoin or Ethereum or anything else. And so we are not really the best place for the speculators. They live very well on exchanges. And so our customer profile, I think, is very similar to yours. And you tell me if it's different, but they're more the long-term guys, and that's why yield for them is a very important element of their overall strategy.
Yeah, on our side, we have a mix, I would say, of, it's difficult to find a percentage, but I would say 50-50. So we have high net worth individuals or even funds who have investments in tokens and wants just to keep them secure. And for some of those customers, the objective of using or of lending part of their assets is really to recoup their custody fees more than anything else. So obviously we provide a service, so we charge for that service, and not as high as others, but we try to earn some money as well. And we found that way of allowing them or giving them the opportunity to lend out to being a way to recoup their custody fee or more if they lend more than necessary for custody fees. That's what one type of customers. And then we have a warm wallets management system that is aimed at active managers of coins. So that could be exchanges. So we have a few exchanges on board with us who use our cold and warm storage solution, and also hedge funds type of players who needs to be able to move assets quickly from exchange to exchange to arbitrage or to do whatever strategy they have. And that's the warm storage that we've built in collaboration with IBM. So we're using the HSMs of IBM. We're the first to use them in the cloud. Other players are using them on premises. We think that in the cloud is more secure actually than on premises. On premises, you know where to go, right? If you see what I mean. And it's been going fine. So exchanges, funds, active traders, I would say, and then the other side would be high net worth individuals, family offices, and funds who long hold effectively their assets and are interested in a yield. So it's a good description of what you just shared. What do you think the impact of the current coronavirus situation and the economical downturn that we see, which is not necessarily only due to the coronavirus, to be honest. We knew it was going to burst at one point, but I guess as many are saying, the coronavirus was the needle that burst the bubble. Do you agree with that? And what do you think the impact will be on our industry?
Yeah, I think I posted an image of pin popping the bubble, I think on January 24th, kind of saying that again, the coronavirus is not the problem. Yes, it's a disease, and yes, it's a huge disruption because it effectively stopped the world economy. It stopped all the wheels from turning. But we've created the world's largest ever bubble, right? I lived through 4 recessions, 91 and 2000, 2008, and now 2020. And each time the Federal Reserve, including foreign banks, central banks, all they've done is kick the can or kick the whole planet down the road by printing more and more money, right? Instead of fixing the problem. And recessions are things that are almost like mandatory in the economic cycle because they effectively get rid of all the excesses, they kill the businesses that should not exist, and they provide the opportunity for fresh capital to be invested in future technologies like decentralization, blockchain, artificial intelligence, machine learning, all the exciting things that we all believe the future is built out of. But instead, you can see, for example, the United States taking $2.something trillion and using it to bail out all the industries that may not need to really exist. So I think the problem we're having is that we are reflating a failing economic system. We're reflating a Keynesian consumption economy. And we keep doing it again and again, hoping to get different results. And the results we're going to get are exactly the same results that happened to every empire in the history of human existence. You can go back and check the British Empire or the Roman Empire or the Byzantine Empire. It doesn't matter which empire you see, you will see that they all collapsed under their own weight of debt, right? And today, the overall global debt is about $250 trillion with a T. So about 100 trillion of that has to be deflated. So the pressure, the deflationary pressure on our world economy is so great that no central bank has enough power to resist that, right? So it's almost like a supernova, right? When you basically you can resist, you can try to resist all you want, but you
you're
will
sucked in
collapse
at one point, yeah.
under the gravitational force of the deflationary pressure. So my view is that this is an opportunity for decentralization. It's an opportunity for cryptocurrencies. And if you look at the last 11 years, you will see that, yes, Bitcoin has performed very, very well against the US dollar, against most fiat currencies, right? It's up 9 million%, where the dollar lost 90 something, 95% of its value during the same period. But if you look at it a very short period of time, you will see a direct correlation to the stock market. So you know, like Warren Buffett says, on the long term, it's a weighing machine, but in the short term, it's a voting machine, right? And every day we vote on the price of Bitcoin based on, oh, today we're excited, tomorrow we're afraid, and so on. So I think the problem we have is really the size of the community. And that's, you asked before about Asia. I think most Americans are very comfortable with the dollar. They think that the dollar will be here forever. So they're less willing to jump in and put a substantial amount of their assets into a non-correlated asset class. If you go to China, if you go to other markets, you would see that people are trying to look for every opportunity possible to put a substantial part of their assets in a non-fiat local denominated currency. So it's a mentality issue, right? So my view is that the growth of the crypto community is going to come from Asian countries, maybe European countries, where there's much more worry about the euro or the yuan or whatever other currency versus the United States. I think it's very hard to convince most people who kind of trade in dollars every day that the dollar is going to weaken over time. And because in this collapse also, we're seeing the dollar strengthen, right? We're seeing people run to buy more dollars. They sell Bitcoin, they sell gold, they sell everything, and they want to sit in dollars because they feel that that is much safer. So we really need to disconnect or decouple from the dollar as a barometer for the price of Bitcoin.
Yeah, makes sense. By the way, audience, if you want to ask any questions, feel free to do that either through the chat, or you raise your hand and I'll unmute you and you can ask directly a question. That's no problem. We are at the half of the session. We plan for 60 minutes. Doesn't have to be 60 minutes. Can be 45, depending on how what else we need to or we want to talk. So we did. I wanted to come back on the. We all read. I think it was this week. These loads of how's it called in English? My English is not always good. Not fines, but you know, people going after companies, crypto companies in the US for breaking the securities rules, saying that these are securities, etc. I know that in the past, the Cell token also has been. You had to explain very, very strongly that it was not security. So it's not an easy environment to work with existing regulators, especially the Securities Commission. So. What do you think the impact of those lawsuits, that's what I was looking for, will be on our industry? Because we don't see that much lawsuits in Asia. In Asia, I think it's more real scammers trying to, in the Bitcoin world or in the crypto world, trying to steal, you know, the people on the street from their savings, which is a problem that we are trying ourselves as an industry to tackle through you know, denunciation of scams and so on social media. But on your side, it seems that the fear for our industry is more coming from the regulators than from scammers. Am I right to say that or not?
Well, look, in the US, I think the SEC from the beginning gave people a very easy path of filing. For example, we filed a Reg D, which is the filing you do with the SEC to tell them, hey, I'm going to offer this. These are the terms and conditions. And they give you a waiver, or they don't give you a waiver, right? And the same thing with FinCEN. You file with FinCEN to say, hey, I'm going to be dealing with money transfers and so on, or value transfer. Make sure it's okay, right? So there was a very easy path of doing it according to the rules. And we, for example, filed both in 2017 when we just started the project. I think we wrote our white paper, ran to the lawyers, and filed the papers, filed the Reg D and the FinCEN filing. So and it didn't even cost a lot of money. So it wasn't like that was a big problem. I think that when you look at, I think there's over 100 letters that the SEC wrote to companies in North America. Both the Canadian regulators and the US regulators wrote to companies that did ICOs. And all those companies were trying to basically get around doing things according to the rules, right? So, and yes, there is gray area. It's not like everything is black and white. So I understand why some people chose to not file any of these filings, but I think we are very happy that we did. And what you've seen with a lot of other people is that they either paid the fine or they decided to go into a court with the SEC or with the Canadian regulators and try to resolve their legal issues. So the lawyers that are filing these lawsuits these are like class action lawsuits. So they represent a bunch of investors who think that they got hurt because the value of these tokens have decreased. And that is more of like a commercial dispute. It's not a dispute over the regulatory clarity. And what happened is that a lot of this industry has moved away from the United States. So if you look at the French law or the British law or even the Singapore law, I think all those jurisdictions have chosen to provide more opportunity for utility tokens, and they clearly define what is a security, what is a utility, and what is something else, right? So I think it's unclear where things are going to land. I think even in the United States, the SEC is basically contemplating this idea that they may allow utility tokens 3 years before they have to decide if they're a security or not a security.
Had a Pierce idea, yes. Mm-hmm.
Yeah, and we decided from the beginning, look, we basically said we don't know if we're a security, but instead of pretending like we're not, let's just file as if we are, and if we are not, then we will just go and say, look, we're not, right?
Mm-hmm.
We'll prove that we're not a security. So I think we've made the right decision, and for a lot of projects, this is a big headache because, again, it's a lot of legal fees, it's a lot of wrestling with lawyers instead of building your project. So the most important thing for Celsius was, can we focus on delivering for the community? Can we focus on bringing 100 million new people into crypto? Because that is the urgency. Mm-hmm. It's not about scamming people out of a few dollars or trading Bitcoin up and down. I don't think, like all these companies that are replicating Wall Street, that are basically bringing the Wall Street ideas into crypto. Oh, we're going to do HFT. Oh, we're going to do an exchange. Oh, we're going to do derivatives. Well, that doesn't do anything, right? If we are here to replace this failing Keynesian system, then we're supposed to replace it with what? Well, let's replace it with Austrian economics. Let's create an economy that is based on savings and on yield and on the way things used to be in the 60s and 70s and so on. And that's what Celsius is trying to do. Celsius is basically saying you can store your assets in a non-correlated asset base, right? Like the Bitcoin or Ethereum or something else. And eventually it will decouple from the rest of the economy because Bitcoin is a deflationary currency and every other fiat currency is an inflationary currency. So you decide where you want to be. You want to be in an inflationary currency in a deflationary economy, which is where we are stuck in. That is the worst scenario out of all scenarios. So the people that understand a little bit about Austrian economics realize that, gosh, this idea of modern economic theory is not so modern. It's just a farce. And just because we've managed to, just because the Fed shot a bazooka at a recession 4 times and it worked doesn't mean it's going to work the 5th time. The 5th time, even a nuclear bomb is not going to do anything. So I think we exhausted, meaning the financial elements that will kind of run our existing economy have exhausted their ability to kind of regulate the activity of the US economy. And the US economy is now in a complete chaos. I mean, the Fed, just to put things in perspective for most of your viewers who might not be involved in the US or see things, the Federal Reserve existed since, I think, 1913. So they existed over 100 years. In the last month, they printed 3 times more than all the money they created in 100 years. Okay? So in 1 month, they created more, not even a month, it's a week. In 1 week, they created more money. They created $3 or $4 trillion of new things. They bought anything they could just to stabilize the debt markets, right? So what is new money? And new money is an IOU. It's something you borrow from the future, right? So when you buy something now with money you don't have, you borrowed it from whom? From the taxpayers, from our children and grandchildren. And when you borrow from the future, all that debt is accumulating interest. And it doesn't, unless you have amazing financial activity, all that debt comes due, because even though the assets are decreasing in value, the airlines, the cruise companies, the hotels, they all collapsed in value. The debt on all those companies did not collapse. It's still there. And that's what people don't understand, that all that debt will have to be repaid. And it's either repaid through bankruptcies or through devaluation of the baseline currency. And that's what we're facing right now. You know, the coronavirus is just, it's just something that popped the bubble, or something that made this ball roll down the hill, and it get bigger and bigger and bigger. But it's an irreversible momentum. So now the Fed has to print trillions of dollars. The U.S. government has to print trillions of dollars just to keep things in place. We're not talking about improvements. We're just keeping things in place with trillions of dollars. So if the entire U.S. budget is 20 trillion, and every month you have to put 2 trillion just to keep things in place, how long can you do that for? So I'm an optimist. Look, I came to this country as an immigrant. I don't want it to sound like, oh, I'm the guy that says bad things about the U.S. I love the United States of America. I have 6 kids who live here in America, right? They're all, that's the people I'm worried about. I'm worried for my kids, you know, and I'm worried about their ability to deliver an economic future for themselves, because we already stole their future. We already borrowed all their future, and all the GDP that the United States is so proudly talking about was all created with financial engineering, with the money we borrowed from the future.
And the corporate debt increased dramatically in the last year because money was cheap. So that allows us to buy back your own shares, and that's more money for shareholders and not for the customers and the employees.
Companies borrowed $7 trillion to buy their own shares.
I know,
including Boeing, including the airlines, the hotels, and now they're saying, sorry, the music stops, we can't pay anything. Well, you spend all that money to buy your own shares at the highest prices. So now you want us to bail you out with the money from our children? You understand? That is the dilemma that we're facing. And the US government says we can't let them fail. You know, even though none of these companies have anything to do with our future. You know, a cruise company failing is not going to do anything for our kids.
No,
right?
that's
Nothing. Sure. They won't even notice that it disappeared.
Yeah, I'm not a cruise fan either, and you can get a disease on those boats and be stuck there for months. So. Yeah, so I have a question from someone actually. So Rohan, who actually works in a company, an Onchain Custodian, our head of business development. So it's a question for you, Alex. If he needs to ask questions to me, he can go direct, I guess. What is the advantage that Celsius has on decentralized lending platforms for lenders and borrowers? Does Celsius have any plans on entering decentralized finance? So decentralized lending platform.
Yeah, we do think of ourselves as DeFi because we use smart contracts, we use MPC, we use all the tools and elements that DeFi platform use. And if you look at March, I think it was March 27, right? What day did it crash by 50%? I think it was March 27. And during that day, let's talk about the day before and what happened the day after. So the day before, Maker and Compound was bragging that they had $1 billion worth of tokenized Ether, right? So they took $1 billion worth of Ether, they created a stack of leverage, right? And when the market started going down, they were the ones driving the price even worse because they caused liquidations upon liquidations. So their business model, and again, DeFi is a good thing, but the business model for Maker and Compound has many, many flaws. An example, obviously, there are technical flaws. They had hackers and people who exploited their protocol, so there are protocol flaws. But the main issue there is that DeFi does not create value for its users. It doesn't work on the way up, meaning a day before the collapse, they were paying 3.5%, but if you wanted to borrow, you were charged 14%. So where did all the money go, right? In Celsius, when we charge, let's say 8% to the borrower, 6% goes to the depositor, right? So the gap is always 80%. It doesn't matter if we have $1 billion in assets, 100 million in assets, or 5 billion in assets. So the DeFi projects, many of the DeFi projects do not have, they don't expand this way, they expand this way, right? So they cannot scale with money. The bigger they get, the more of a risk they create for the entire cryptocurrency infrastructure. So I think, and you've seen Maker, for example, very quickly realize that they have an issue and plug in USDC, right? Plug in centralization, which is, they've done what we've done 2 years ago. So what did Celsius do 2 years ago? Celsius said, here are 11 different stable coins. Here are all the basics, blockchains, 13 blockchains, 11 stable coins. Let's match them up this way instead of creating tokenization and create leverage in the system. So I think we had 0 liquidations on the institutional side. Every one of our counterparties provided additional collateral, and we had no issues with any protocol or smart contract hacks or anything like that. So I think the Celsius model proved itself resilient, scalable. It was the best day Celsius ever had. We've done, if I had more coins, I would have done 10 times as many loans. I just didn't have more coins. I was fully deployed. But the point is that I think this flash crash has forced the DeFi community to look at how do we balance centralization and decentralization. And I don't, look, my main beef, and I tweeted about this back in 2019, and people gave me a lot of hard time about it. My main beef with DeFi was, if you created your little bubble for all the people already in crypto, how are you going to bring new people in? No new person who doesn't know anything about smart contract is going to figure out how to run on Compound or how to run a Maker. So if we are really here to bring 1 billion people in to the DeFi or the crypto community, we're not doing a very good job, right? But by keeping it very technical and keeping it in a small club of people who already have Ether.
That's actually, yeah. Go ahead. I was going to say that's actually the reason why I don't call it decentralized or centralized finance. I call it open finance, because it's really, I think it shouldn't be religious about whether it's decentralized or centralized. It's the same thing for custodians. We have this argument, yeah, but custodians are centralizing assets of customers, etc. Well, we don't actually, because they are in different wallets. They are managed in different wallets. We're just helping with the security, the secure access to those wallets, whether they are directly in the hand of the customer or through a service providers who can help with security. Doesn't matter. It's still the blockchain with decentralized wallets that can be managed in a decentralized way through, in that case, a centralized partner. But it's not that much of a problem. There will still be people who will want to hold themselves and have their wallets in their hands and be happy to show an NOS saying, I have 1 million or 100,000 in there. Yeah, good luck for them. And others will want to use service providers because they don't feel comfortable especially the mass people that we're trying to attract. They won't feel comfortable handling their own private keys. It's as simple as that.
That's right, and I think I think it's a difference between do you want to add volatility? So DeFi today adds volatility, right? Mm-hmm. It adds volatility when they tokenize, and they add volatility when they detokenize. Or do you want to add utility? So by creating the ability to borrow on both sides, the hedging or the leveraging that we do is actually usually counter. We're always on the other side of the trade, right? Mm-hmm. Because we're crypto denominated, and we always lend to people who are dollar denominated. So we are deleveraging the system, not leveraging the system. We never have more loans than assets. So, mm-hmm. So my point is that if you add utility to the community, and for me the most important utility is interest income. I truly believe that interest income, that for every person who believes that Bitcoin is doomsday insurance policy, there's 100 people who just want to earn interest. And mm-hmm. they may want to earn interest on their Hong Kong dollar or Australian dollar or US dollar or whatever, right? Or British pound, right? Which is what we offer. Or they want to earn Bitcoin on Bitcoin. So that is an easy thing to sell to people. And it's much easier to convince a newbie to come to crypto because they can earn 7 or 8% on their fiat currency than it is to convince them to believe in Bitcoin. So my whole message to the look, I'm a big Bitcoin holder personally, right? I'm not talking about Celsius. Part of what I'm doing is a very selfish reason. I want this community to grow because then my coins are going to be worth much more. Mm-hmm. And I've been in the community since 2013. I've seen everybody fail at growing this community. I was in the beginning of the internet, right? I wrote the Voice of IP protocols back in 1994. And in 2 years, we have 100 million users. Why? Because, I remember I used to work with the French phone company, France Telecom. And it was so easy to convince people to switch away from France Telecom. They used to charge $2 a minute to call America. And we would sell them the same service for 20 cents. So when you give people utility, and we're using Voice of IP right now, it's such an easy utility to use. So let's deliver exactly the same utility for people with their finances. Let's give them interest income. Let's give them cheap loans. Let's give them stuff they need every day, because not everybody wants to, like you said, hold their keys, and not everybody wants to be a DeFi expert and know every hack and every code and how, and audit smart contracts and all that stuff. So, but I wanted to circle this back to ask you a question about you're in Asia. I'm not. So you instead of asking me about it, I'm asking you, what do you see in Asia as far as the community developing, and what direction you feel the community is going, both the crypto community and the finance community?
Well, I mean, on the crypto community, there are, I think, a definite interest from individual people for crypto, probably more than in other countries, in Europe or in Americas, and I think that reflects maybe an old tradition of liking gambling as well, for sure, in Asia, but also the for some of them the fear of losing against their own currency, especially in countries where currencies are weak, or at least have demonstrated in the past that they can be hit very hard by economical crisis. So that's, I think that's a good news for our industry, is the fact that there will be customers both on the high end, meaning high net worth individual family offices, etc., and retail that will want to contribute to that economy. On the investment side, I think what is interesting as well is that the institutional are less maybe traditional than the European and the US, meaning that they listen a bit less to their compliance departments, who are, when they don't understand, they say no. It's as simple as that. So many institutional are still reluctant to go into this space because of their compliance department. But we see in Asia Pacific that people are more eager to try. And it's not obviously 50% of their assets, but they will try with a 5 to 10%. So that will also contribute to the build-up of the whole crypto economy. I would call it this way. So that's why we're happy to be in Asia, to be honest. I guess that's the positive. The negative is that we still lack the right level of infrastructures and honest infrastructures. So third-party custodians, we are having a few now. Serious Onchain Custodian is one of them. Others in Hong Kong also, and I see that Alicia is on the phone from Hex Custody. These are serious players who wants to build a serious industry. And as I mentioned early on, we still have too many scammers, too many projects that are just there to make quick money in 1 or 2 months and then will actually steal money from people. And I think as a community, our job is also to be voice, to talk about it, to mention the name of the companies we believe are not should not be trusted. It's sometimes very difficult because you don't want to accuse companies without proofs, but I think there is this wish from the community that I see that on every single chat I'm participating to, or with being WhatsApp groups or on Telegram, wants to get rid of the bad seeds and really be able to build something real that will work for everybody. So that would be my analysis of Asia.
And look, the internet started the same way. I mean, most people are too young to remember 94, 95, but I can tell you that the beginning of the internet was all about sex sites and all kind of exploits of using the internet for a variety of things that were not necessarily
same thing, yeah,
positive. And obviously, some of the most powerful and useful companies that ever created came from the internet world. So I think we just as a community, we have to scale, we have to grow, and we have to get new heroes. I mean, some of the heroes we have in the crypto community, unfortunately, like, you know, I'm sorry, but one guy bragging about killing people and the other guy's bragging about going to jail and so on, that's not the heroes we need, right? So I think...
I know what you're talking about. I know which one you're talking about. We have a few in Asia as well, for sure. One in Australia, for example.
Yes, my point is that this is fine. Look, the internet, when you look at Google, they solved email or they solved search, right? You look at Facebook, they solved social networking. That's nothing. The blockchain is all the money in the world. It's all the money in the world. It covers everything, right? So the opportunity is 100 times bigger. I said that many times, and people look at me like, what are you talking about? The largest company, the most successful company in crypto will be bigger than Apple, will be bigger than Google, because it will manage all the money in the world. So, and there's no room for 5 of them, right? I mean, there might be five custodians, but the company actually helps you transact, that stores your value, validates everything, is going to be one, right? Dominant global company. So that's the opportunity. Now, you know, there are basically 3 options for it. Is it going to come from the government? Is it going to be the Chinese government? Is it going to be the US government that gives you that coin? Is it going to come from corporate users, for example, Libra or JP Morgan or Alibaba? Or is it going to come from the open public blockchain, right? Is it going to be a version of Bitcoin or Ethereum that really kind of dominates the planet? So obviously we all cheering, I think you would agree with me, we're all cheering for an open standard, consensus-based, public ledger system. But unless we work on that, unless we deliver utility into that infrastructure, it's not going to happen. It's going to be stolen away by Libra or by somebody like that. So that's really the kind of, again, having seen that movie before with the internet, I'm definitely, you know, cheering for the third option, for the public option.
Yep. We have 2 more questions, and anyway, we started 5 minutes late, so we can end 5 minutes late as well. So the first one, could you talk a bit more about the On-Chain Celsius partnership? So yeah, we have a PR that has been going out this week or last week, explaining what it will look like. But on our side, and maybe you, Alex, you can explain how you will use Onchain Custodian. But on our side, we are already actually offering our customers the ability to lend their crypto to Celsius if they wish to earn a yield. So the way it works is that our customers, let's say you have 1,000 Bitcoin with us, you want to lend 100 of them to offset your custody fee, or for whatever reason you want to earn a yield on that, the way we will do is that we have a partnership with Celsius to take those 100 BTC on board and calculate on a weekly basis the interest that they get and be informed about it. And that interest is rolled over into the capital being lended, on which the interest is calculated. So very simple model. We will integrate as we go throughout the year to make it more automated, let's call it this way, and that you just at a click of a button can lend out to Celsius or to the other partners that we have, for example, in wealth management products, But that's the idea. So we focus on our core activity and we partner with the best in other domains like lending, like wealth management, etc., to enable our customers through integrations of platforms to access those services. And on your side, Alex, and
sure. So first, we work with about 250 custodians, not custodians, 250 institutions, and many institutions came to us and asked us, okay, well, where do you custody? And most of our custodians were US based. So it was very important for us to have an Asian based partner. So institutions or family offices could come and say, I'm designating this custodian, right? So when you're not lending my assets, I want these to be resided with this custodian that I know the rules, I know the laws that apply to the coins and the keys and everything else. So from our standpoint, all of our services are transparent. They look exactly the same. But we can basically, when the coins are not lent, they are residing in the geography and under the rules that the depositor is choosing, right? And that's a very important designation, as the rules around the world are basically being clarified. When everything is opaque, it doesn't matter. But suddenly when everybody knows what the rules are, and the things that people have to worry about is, for example, let's say there's a legal dispute. Do you want the Seychelles Island laws to apply, or do you want the Singapore laws to apply? Do you want the Delaware laws to apply, or the London laws to apply, and so on? So people that especially sophisticated family offices or institutions are very careful about these things, and they want to know what is the governing law, and these are the things that in this partnership we can deliver that I don't think anyone else has enabled. I don't think anyone else can enable you to choose the geography or the custody provider that you have. So we created this multi-custodian infrastructure, and I think we chose best of class, and very happy to partner on this and go to all of these customers and convince them that this is the best solution out there.
Thank you. And we still have one last question, so I'm going to take it, and then I think we will be leaving everybody back to their business. At least in Asia, it's only morning, so we still have a lot to do from home for most of the people. I'm home today. So currently, Celsius gives a loan against crypto-based collateral. While this allows borrowers to get a loan with credit rating, but it also means borrower needs certain capital to procure crypto assets before they can get a loan. This works very well for investors who have acquired assets at low price or with a longer term view on crypto prices. Does Celsius have any plans to open up loans, fiat or crypto, to individuals/corporates based on credit score, credit worthiness, such as they can borrow without existing crypto asset for collateral? I mean, to say allow borrowers to get a loan without credit rating. Well, I think it's, do you plan to offer loans backed by something else than crypto or fiat? That's the question, I think.
So yeah, so we are not an unsecured lending company, right? We're not like a bank that gives you a credit card and then you can charge as much as you want, and they charge you 24%. And if 10% of the people don't pay the money, that's fine because they made so much money on everybody else. That's not our business. Our business is to do only asset-backed lending, and we will accept many digital assets. So we plan to accept non-fungible tokens. We plan to accept securities when they get tokenized. We plan to accept many, many things. If your house is legally accepted in your country with a digital certificate, we can take that and lend you against that asset. So we are, I think, ahead of the of the curve here of being ready where the world is not ready yet, right? The world is not yet tokenized most of the assets. So you cannot take your car, for example, take the digital certificate representing the title on your car, deposit in the Celsius token, in a Celsius wallet, and get a loan against your car instantly, right? So these are the things that we see as the future. But in most countries around the world, that is still a few years away. So today we only focus on the things that are possible today. And, again, we are doing exceptionally well. We paid over $11 million in interest in 2 years, where all of our competitors put together, including DeFi and non-DeFi, if you put them all together, they did not pay $11 million in interest. So why is the platform so successful? It's not because we're trying to do what everybody else does. It's because we solve a problem that no one else solved. So for this industry to grow, we need to solve, in my view, the blockchain is here to solve things that were never solved before, not to create a faster bank or a cheaper broker or a dealer, right? It's about creating a whole new infrastructure for the financial system of the future. And that's what we're focused on. Every product we released is a product that never existed before. We're adding, for example, we have a new product which is going to be gold, earning interest in gold. So you can buy gold, it's physical gold, it sits in Switzerland. And every year you will earn 3% in gold on your gold, physical gold, right? It's represented by a token, but this is real gold sitting in the vault in Switzerland. So that never existed. In 5,000 years of human existence, no one has ever been able to earn positive yield on gold. So that is something you can do with tokenization that you could never do any other way. So these are the opportunities that we're looking for, and with Onchain, that's what we deliver: custody with positive income. Again, never existed before, right? There's no custodian in the world that gives you yield on their assets, right? So these are the things that I think are going to convince many people to use these services, because the partnership we have is a utility that now others can use to create additional positively yielding products. And that's the opportunity, and that's what we're going to continue working together on.
Great, thank you so much. And do you still call it money over IP, MOIP, or?
Yes,
Yes, absolutely.
IP.
So that's the conclusion of today. So we're trying to together build infrastructures for money over IP, MOIP, as an analogy to VoIP, obviously, voice over IP. So thank you so much, Alex. It was great talking to you as always. I hope to see you one day in Asia. I don't know when, or me in New York. That's not going to be at Consensus this year for sure, and we'll see when we are able to travel again. And in the meantime, I'm going to say bye to everybody. Thank you for attending. Thank you for those who will view this after in the recording. And there will be more news coming from Onchain Custodian, and I'm sure from Celsius as well in the coming weeks as we grow. And I have a few thank you on the chat. So thank you, guys. Bye, everybody.
All right.